Trading 212 is an incredible investing app, not just because it's free, but also because it's packed full of awesome features. It's a really exciting time in the UK investment app scene right now, with lots of innovation and platform fees falling all the time. Trading 212 is at the forefront of this revolution.
We did a full review of Trading 212 back in 2019, and since then the app has gone from strength to strength. As a quick recap, Trading 212 offers zero fee investing in 3,000 plus global stocks and ETFs with no foreign exchange fees. It also has zero fees for using an ISA, and a feature we absolutely love is fractional investing. In this video, unless we say otherwise, we are only talking about the Invest and ISA accounts.
Since our first review, we've had hundreds of questions about Trading 212. So today we are going to answer all of the most frequently asked questions, such as, is Trading 212 a scam? Do they pay dividends? If it's free, how do they make money? Should I go direct to Vanguard? All these and more coming up. Let's check it out. Welcome to Unshackled.com, the investment and finance channel and website that sets you and your finances free.
That was Andy and I'm Ben, and if you like what we say, hit the like button and click subscribe.
We have lots of cashback offers worth hundreds of pounds on our website at Unshackled.com when you sign up to various platforms. From time to time we have Trading 212 offers where they give you a free share, so it's worth checking the offers page out. There are currently some great offers for competing apps including Free Trade and Stake, so maybe check these out as well. Now let's get into the video.
Which account do I use? CFD, Invest or ISA? When you download the app, you'll be given a choice of 3 different accounts or product types. We are of the belief that most people should not go anywhere near CFDs. These are potentially dangerous financial instruments if you don't know what you're doing.
Their CFD account is not free to use, and 76% of their retail investors, i.e. you and us, lose money when using the Trading 212 CFD account. We have an entire dedicated video on why you should avoid CFD trading, which we'll link to in the description below, so feel free to check that out later. The Invest and ISA accounts are the same, except the ISA is tax efficient, although most beginners don't have enough money invested to pay tax anyway. When you invest through the Invest and ISA account, you own the underlying investment. You're not just placing a bet.
Is Trading 212 a scam? We're not sure why people are saying that they think that Trading 212 is a scam. Trading 212 are authorised and regulated by the FCA. You can check this out for yourself, but here we have done this for you. We also have used the app ourselves, and we know many other people who use the app and have had no issues whatsoever.
As we just mentioned, a lot of people lose money with CFDs and are likely to be extremely disappointed, and we suspect this is the root cause of the scam myth. But despite this, the app has an incredible rating on Trustpilot. Almost all the negative feedback seems to come from those using the CFD account, which you should only use with caution anyway. We're not suggesting that there are no genuine complaints, but it seems that this is the minority. In any case, as a regulated platform, they must comply with complaints according to the FCA requirements.
Is it really free? Incredibly, yes. At least from fees which they can directly control. A lot of things these days claim to be free, but have hidden fees, that you have to navigate around like a ninja.
Normally there's a big heading that says free that gets you all excited, and then you go straight to the T's and C's or fee section, only to discover that it was a load of nonsense, when in this case it's true. It is free.
We've scoured the entire site and have personally used the app ourselves, and have not been the victims of any hidden nasties. Of course, there is no such thing as completely free investing, because you have to pay the bid offer spread, which is a feature of the stock market.
All shares and ETFs have 2 prices, a buy and a sell price. The spread is what you would lose if you bought and immediately sold an investment. You may also have to pay stamp duty or other taxes depending on what you're buying. And when you buy ETFs, you will pay a fee called the ongoing charges figure, OCF, which costs typically around 0.1 to 0.3% of your holdings depending on the ETF. Again, this fee is from the ETF provider, not Trading 212, so it's out of their control.
If Trading 212 Invest and Trading 212 ISA is free, how do they make money? According to the co-founder, actual trading costs that they as a business incur is less than £1. So waiving trading commission does not have a detrimental effect. Charging for other services should more than make up for this shortfall. The most obvious way in which they make money is from their CFD platform. So we would suggest that they are using free investing to entice people to their platform and then hoping they go on to use this paid product.
Also, as with many online businesses, we'd expect them to be currently going through an explosive growth stage, where it's really important to grow as quickly as possible. With size comes economies of scale and strength. Profits can be made later.
Trading 212 adopts a classic freemium model. Like mobile games or probably your bank current account. Your bank account is free, but they charge you extra fees for overdrafts, loans and so on. We would expect Trading 212 to start introducing paid for premium services at some point. They often give little teasers of upcoming features, and from what we've seen, we wouldn't mind paying a small amount for some of these if they were to charge.
Should you use Vanguard or X platform instead? You would think that Vanguard's own platform would be the cheapest place to buy its own funds, but this is not the case. Vanguard's platform is incredibly cheap, but you cannot beat free. However, price is not the only factor you should consider when choosing an investment platform. Investment choice and additional services need to be considered.
Trading 212 does not offer the extensive choice of investments that you get with a more premium platform like Interactive Investor. We both prefer to have more choice and are prepared to pay a little extra for this, but this doesn't stop us from occasionally using Trading 212 and other free trading platforms.
Vanguard's own platform is amongst the cheapest for the full range of Vanguard funds. Trading 212, for instance, does not offer OICs, so you cannot invest in the life strategy range, for example. You can use multiple platforms, so you don't have to stick to just one, but you can only have one active stocks and shares ISA in any given tax year.
Do they pay dividends? We're not sure where this question comes from. We suspect that it arises from the complexities of CFD trading. As you can see here, dividends for the Invest and ISA accounts are paid directly into your account balance. We can confirm this from our own experiences with the app. Some ETFs are of the accumulation variety, meaning the dividends are not paid directly to you, rather they form part of the growth of the ETF price. The ETFs that pay dividends to you directly are the distributing variety. Check the ETF provider's own site to find out which type it is.
Why does the share and ETF prices differ to the real price? This is going to surprise beginners if they even notice, as the price you pay for the stock is very likely to be different to what you see on the screen prior to placing the order. Stock prices change all the time, and it should be expected that by the time the order is fulfilled, it will have moved. This is the explanation they give, and we know this will be part of the answer. However, we have noticed significant differences, and we doubt that this is the full explanation.
We have seen some people incorrectly state this to be the spread, but this is not the case. Trading 212 don't apply their own spreads on the Invest and the ISA accounts, and the actual market bid offer spread is usually tiny. From what we've worked out, this is just an error or delayed price that the app is showing, perhaps due to extreme market volatility. We tested this by taking a live ETF price from a different app and comparing it to Trading 212. In this case, Trading 212 was overstating the share price by around 4%. The market price had crashed that day, so it seems that there was just a delay on the Trading 212 app.
However, the executed price from Trading 212 was almost identical to the live price that we were expecting. This was correct and expected as prices move continually. To sum all this up, we have no concerns with the executed prices on Trading 212, but the app does display incorrect prices on occasion, which is annoying.
Is it okay to invest in German listed stocks and ETFs? Unfortunately, we don't know for sure. Many foreign countries automatically apply a dividend withholding tax, and we're unsure if Germany does this. But from what we've read, it does seem to withhold tax.
Unless we totally understand an investment, we don't invest. If any of you watching do know the tax consequences of investing in German domiciled shares and ETFs, please let us know in the comments.
Question of the day: what do you think of Trading 212? Let us know in the comments below.
Thanks for watching. On this channel we talk about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is moneyunshackled.com. See you next time.